Okay, there we go. All right, perfect.
Let's see.
Now, are you in there?
I see that it's on live. I'm trying to see. Now, I'm not showing that. It's interesting. I'm not showing. I see that it's on live. I'm trying to see.
Let's see if I.
Now, I'm not showing that. It's interesting. I'm not showing. I see that it's on live. I'm trying to see. I think you need to switch your view when you stop sharing the image and just switch your view to gallery.
When I stop sharing?
Stop sharing your screen, the page, and then just change your view to the gallery view.
I stop sharing?
Stop sharing your
Okay.
screen.
Okay, 1 second.
Just change your view to the gallery view.
I stop sharing?
Stop sharing your screen.
Okay, 1 second.
I think we're good to go, man.
Okay, well, everybody, thank you for showing up today for the Legacy Business League. We have a special guest today, Jonathan August, who's going to be talking to us about money matters and how do we recover and plan for our future after the COVID-19 pandemic that's shook our whole nation here. And Jonathan, he, a local resident from Biloxi, Mississippi, comes with about 25 years of financial background in the financial industry. Currently, he is the chief CFO at Infinity Funeral Service. Is that correct?
Yeah.
Jonathan has a plethora of knowledge in the financial industry and how we can plan for our future, for our generations and our downlines. And all of our Facebook fans that are on live right now, we thank you so much for joining in with us and listening to Money Matters. Money matters. It does matter a lot about how we make the world go around, how we provide something for our children or our downline or our generations to come. And so without further ado, we thank you so much, Jonathan, for spending time with us. And let's dig into this and talk about money matters and how do we really recover from this pandemic and how do we plan for our future? Thank you so much.
Thank you. Glad to be here today. I do want to just, we're going to have a discussion today, hopefully around a few topics that will be beneficial to a number of people, whether you're a business owner or an individual. Hopefully you'll have some information that you will find that is impactful for you. If you have any questions, feel free to type them in the chat. And if we have time, we'll be sure to address those. One of the first things I just wanted to share today was when we're thinking about, first and foremost, as a business owner, for those of you who've been following the Legacy Business League, that is kind of our primary focus, is to focus on business owners and making sure that they have access to information and resources to help them grow and be successful. And so one of the first things we want to just kind of quickly highlight is right now there's a lot of information around and a lot of energy around the Paycheck Protection Program, which is the PPP loan program, the EIDL, which is a loan program specifically through the SBA, as well as there are a number of grants that I've seen circulating either via email or text message. One of the things that I would say is always kind of do your due diligence and make sure that you understand what you're looking for, what your goal is, and then kind of what the long-term impact. One of the misnomers with the PPP program is that there are going to be there is a stipulation on how you use the funds. And if you're not able to accurately document how you use those funds, you may end up with a loan balance at the end of that Paycheck Protection Program grant. There's a spend time period as well as a documentation period. And so just make sure that if you're applying for those funds, whether you receive the funds in the first round and looks like there may be a second round of funding approved, make sure you're checking with your local bank or your lending institution just to make sure that you understand all the parameters, and that if you got the money, great, but then what do I need to do to make sure that it truly is a grant and not a loan? If it does become a loan, from what I'm seeing, it's like an 18-month repayment period. So that could, if you're a small business owner, even though the interest rate is pretty low, if you have an 18-month repayment term, that can make it pretty an aggressive repayment. The EIDL, which is Economic Injury Disaster Loan, that's a program that has existed outside of COVID-19. That is something that you can apply directly with SBA on. I've had a couple of clients here who've actually applied and received funding through it. The website says that they're offering, or they're projecting a 2 to 3 day turnaround time. We're seeing more about a 10 business day turnaround time for funding an application. And so just kind of, there are lots of resources and things out there. I would just say, do your due diligence. The last thing I'll say, if you're seeing anything around grants, anything around funding, anything that could be, may sound really, really good and aggressive, or sound like, oh man, I need to hop on this, just check. Unfortunately, there are just as many people out there that are doing scams where they're getting all your tax ID information for the business. They're getting your information as the business owner. And then now you don't even understand. You just were a participant unknowingly or unwillingly in a scam. So just make sure you always check your resources. I understand that we need help, we need guidance, we need support. Many of the businesses are struggling, but the last thing we want to do is think that we're doing something good to protect our future and our business, and now we're somehow hurting ourselves in the long run. That's go ahead.
Well, I like that you talk about the identity and the potential identity theft is really important for all of our listeners to try to put a physical face to someone, that if they call you a cold call, I mean, normally we got to be protective and not be anxious for trying to get a process done and hurry up and get something done. It's so important that we check those resources, check the company's name, go on the website, go to the state secretary's office and run a background check on them, and call someone else and verify, that company, or do your due diligence before you just willingly hand out your information to someone. So very, very good, very, very good point there. Jonathan, what should I do, or tell our listeners, what should we do for with our stimulus check if we get it and you qualify for that? Give us some ideas on what we should do with that.
The first thing I'll say is, if you're fortunate enough to get the stimulus check, be thankful, be grateful. It is not going to everyone. And so I've seen a lot of people sharing a lot of things. But to me, $1,200, while it may not be the cure-all, is better than zero. One of the things that I would do is think about the long-term decisions. Anytime I have any sort of money coming to me, whether it's a bonus, refund, tax refund, anything, I always sit down prior to receiving that money and make a plan for that money. So it's important to make sure that we have a plan for what we're going to do. If you don't, that $1,200 will hit your bank account. You'll be at a store, you'll be at a retail, you'll be somewhere, and just without even thinking of it, you'll see $50, $100, $200 that will be gone, and you won't see the potential long-term benefit of that. One thing that you could really think about doing is, I tell people like this, I'm a Dave Ramsey light follower.
Me too.
I describe his thought process, and one of the things he talks about is having an emergency fund. Now, your emergency fund, they tell you to have 3 to 6 months of living expenses. Well, you're probably not going to be able to fund your emergency fund with that $1,200 stimulus. But could you put $1,000 in a savings account that would then be kind of your emergency starter fund? Because that's one of his step ones, is he tells you to put $1,000 into a savings account. And I've been able to do that for the last several years. And I will tell you, anytime I've had a flat tire, anytime I've had any sort of accidents or whatever, my deductibles, whatever, it's always been less than $1,000. So having that $1,000 takes what could be if you don't have that $1,000, could be an emergency or a crisis to just being a challenge and a hurdle to address. If you already have that $1,000 in there, look, I'm not telling you not to spend the money. That's why they're calling it a stimulus check, because they know the people are going to go spend the money. But what I would say is think about it long term. You probably will start to see advertisements about, hey, you can come bring your stimulus check and we'll match it, or we'll multiply it, and you can use it as a down payment on this, that, and the other. Thinking about what the payment is going to look like at the end of it, and did you need that in the first place? I'll use it as a personal example. I saw an advertisement up here where they said you could get a new Chevy vehicle for 84 months, 0% for 84 months, and no payments for 4 months. Well, that sounds really good for those 4 months. But when I did the math on the type of vehicle that I would need to drive based upon my family size, my payment is still going to be $800 a month after those 4 months is up. And so just thinking about not today, but tomorrow. We've got to look past of where we are in the moment and not make decisions kind of in the spur of the moment that impact us over time. And even as you're saying, our heritage and our legacy.
Yeah. I love it, man. I think that we all should be planning for our future, even with the stimulus, if you're fortunate to get it, to definitely look down the line, don't go buy a big screen. Well, can't tell you what to buy, but the television or that purchase, one-time purchase may not be the consumable. It may just dry up. It's a lot earlier if we're looking to plan it. If there's an opportunity to invest in your children and help in their education or a trade school or whatnot, it's so important to look down the line and not right now. Even though if your light's about to be turned off, hey, go pay your light bill and get the lights on, but still move further down the line to try to continue to move forward and in the recovery of this. So Jonathan, you did speak about the forbearance and deferment. Can you really dig a little bit deeper into what that means and how that plays out during with your background in banking and mortgages? Can you talk to our audience about that and really break down what that forbearance or deferment really looks like?
That's actually a really good topic. And I think that it's really important that we understand that all banks, all lenders do not operate the same. And so sometimes some banks and lending institutions are using the term deferment, and some are using the term forbearance. They can mean multiple things. A deferment can mean we are, as a lender, saying we're just going to take that payment and put it onto the back end of your loan. There's no change in terms, no change in interest rate, no change in payment escalation, anything like that. Basically, if you owe $350 today, instead of paying that $350 today, you can now go and have that payment be due on the end of your loan. That's an option for you. The other options may be maybe looking at a forbearance, and I've seen some that they're calling forbearance and they're working the programs differently. But this is where it's important. In some cases, people are signing up for forbearances where they're saying you don't have to make a payment for 30, 60, or 90 days. But then at the end of whatever that length of time is due, is you owe all of the payments that have been deferred up to that point immediately. Meaning if I did a 90-day forbearance on a mortgage in the month 4, I now owe all 4 months of payments. And so if you didn't have 1 month of one mortgage payment, how are you going to have 4, right? And so now you're going to now be thrown into a modification, and then you may see some other potentially negative impacts. Some questions to ask your lender before you do the forbearance, before you do the deferments. Ask them a couple of questions. How's it going to impact your credit? Are they going to report us 30 days late? Because if they're saying you don't have to make the payment, but now if you're being reported late, then that can impact your credit. The other part is when is my next payment due, and what amount is going to be due next. And they should really be able to send you that type of information in writing. It's really important to just make sure that you understand all the ins and outs of what you are hoping to have. And look, I get it. Things are tight. I definitely recommend the last thing you should do is, kind of do the mindset where we want to run and hide. You need to communicate. As a lender, I always tell my clients, look, call me before I have to call you. Because if by the time your name is showing up on certain reports, there may be less options available to you that would have been available, if you would just be proactive. So to that point, there are a ton of banks, even our utility companies, all sorts of companies, they have different things where they are doing workout agreements. They're stretching out, saying, look, we'll kind of re-amortize your loan. We'll look at different options, but you don't know what options exist unless you call and have the conversation.
Yeah.
Running from a situation does not fix anything.
Yeah. Even the approach of most companies are being proactively putting out new programs because of the pandemic. We as consumers, or we as customers and clients should be proactive and reach out to them, when there's a time of need or something. So I think that it is a two-way street in that because, mortgage companies, you can see cell phone companies all doing different types of new programs right now, being very proactive because they appreciate us, and we should also, return the favor if there is something that's going on. If there's a tight month and we have to make that phone call, it's great to do that. It's great to do that. I want to just go back one more time just on the deferment and forbearance. Just ask that question, or at least tell the audience, what would you prefer? Just kind of your advice with those questions, or is there something that they can request? Say, hey, can you do this XYZ, because we heard this on the Legacy Talk series, and is there something that you would advise our audience to talk to the lenders about?
Well, so the first thing I would do is ask your lender what options they're offering. And most companies are offering some sort of payment, modification, especially if you're experiencing a hardship. So first thing is ask, and every bank, every lender, every credit card company, everybody's not the same. So ask first and foremost what they're offering. If they're saying I'm offering a deferment, the way that we look at deferments is just like I explained earlier. The company I work for, we look at a deferment, we're putting that payment on the back end of your loan, right? And so then that is, in most cases, a little bit more favorable than possibly looking at a forbearance. A forbearance says I'm not making any payments, but then it's just really important to understand what are going to be the requirements at the end of that forbearance period.
Right.
Am I going to just resume with the regular monthly payment, and then that interest or payment gets broken up over the rest of your loan? Or am I going to now be having to make a full 3-4 month payment at one time?
Yeah.
I've seen cases with multiple entities or multiple financial institutions where they use the terms interchangeably. So it's really important. I've seen some use the term deferment, and I've seen some use the term forbearance, but they have kind of characteristics of both. So it's important to ask your lender, okay, what does this mean? That's why I said asking that question. What is my next payment due? What is the amount due? And then what will happen with the payments? And then the last question is obviously still to make sure you ask, how will this impact my credit? Yeah. And if you can answer me all those questions before you agree to the whatever payment modification you're looking for, will make you an informed consumer.
Yeah, that's great. That's great knowledge and wisdom to start asking those questions. Always, the great thing is asking the right questions so that you can get the answers that you want.
Right.
Let's turn the page. Let's talk about, is it a good time right now to invest or in stock or real estate? And is this a good time in this economic downfall?
So I personally believe that it is. I'll tell you personally, I have been investing. I have intentionally not been opening my stock portfolios and my 401k accounts because they are down, but I'm putting more money in. And the thing you have to think about it is everybody's strategy is a little different. I'm in my late 30s, so my trajectory for the need of those funds is about 20 years out still. So I have time for those accounts and those investments to recover, for lack of a better term. So for me personally, I think this is a great time. I've been able to actually purchase some stocks at a discount. whereas they may have been trading, 30,
Yeah.
$40 here. Now they're in the 20 range, right?
Well, yeah,
But still, but you
absolutely.
have to, but then understanding that it is risk involved. I mean,
It is.
I'm not a licensed financial advisor, so I don't provide any personal or specific recommendations around stock, but just making sure that people understand what they're getting into. Do I understand that there is measured risk that I could lose money? Absolutely. But I've chosen the stocks that I tend to invest in tend to be more safe, secure. I'm looking at things that are tried and true that if they go down, none of it's going to matter anyway.
That's right. That's right. That's right.
And I also look
So
at stocks with dividend.
yeah, that's great. And there are tons of apps that you can jump on and look at how the stock is moving up and down, and if they're trending, and you can look at what the stock was worth a year ago, and now today could be a year ago is $100, and today is $9,
Mm-hmm.
and that may be a time for you to look at that and make that consideration. Well, let's talk about real estate, and this is an area that I know that you're familiar with, being in the banking industry and the mortgage side and lending. So could tell us about that, and what are some of your ideas about real estate?
So it's I will tell you, we're going into some uncharted waters. Some of my friends who are in the real estate market or real estate industry as realtors, they are unfortunately projecting a decrease in home values and an increase in foreclosures. Kind of it ties to what we were talking about earlier with the potential forbearances and things like that. And
Yeah.
so, if you already have real estate, this may be a good time to hold. If you're looking to get in, perhaps waiting, 3 to 6 months or 12 months to kind of see where the market's going to stabilize, you may be able to find that you'll be able to buy a home at a lower price point and move in with more equity possibly once it rebounds. My whole thought process about real estate has always been, and I actually, I have a rental property down in Mississippi, and it was my first home that I ever bought. And so I'm thankful that it has been a rental now for about 8 years. I always made the approach or took the approach of making sure that it cash flow to pay for itself, and then I had cash reserves to support that payment in the event that it was vacant. Because it's just the reality is when you go into the investment space, there may be times where your tenant isn't able to pay. I have some friends right now who, depending on the price point of the real estate that they currently are holding, they're seeing a high delinquency rate and an inability to make a monthly rent payment. Compound that by the fact that a lot of courts are closed, so you can't even do evictions. So now you've got somebody in your house that you own, you still have a mortgage payment due, but you can't remove them. So if you don't have that kind of capital, that cash reserve to be able to navigate that process, then you could find that something that could be very positive turn out to be a real big negative. So for me, I always, at a minimum, before I even get into the real estate space, I make sure I have my 5% down for investment, and then I make sure I have cash liquid reserves to make that payment a minimum of 3 months. It's just, even in a normal situation, even in normal circumstances, people move out, they skip out without, telling you, or they sometimes have damages to the property, and then that means it's going to go unrented while you're making the repairs. So for me, I would say if I haven't been in the real estate market before, I would probably educate myself a little bit, or pair myself up with some strong realtors who have experience before I just went and just went to like the for sale by owners and say, oh, I'm going to buy this because it looks cheap. Okay, everything that glitter isn't gold. And so just understanding what you're getting into.
Yeah, and that's so important. And as we talk about money matters and how do we rebound from this economic downfall and the pandemic, is most importantly, all of this is to be healthy. You got to be healthy. You got to try to work on staying fit and going to the doctor and taking your meds. I mean, these are things that the money matters doesn't even matter if you're not healthy enough to reap the benefits of that. So it's important to continue to think about that as well. We've had previous speakers, doctors, and talking about the pandemic and how do we recover and how do we stay safe. And now we're as the series, it migrates a little bit. Now we're into the money matters and how do we continue to go forward and plan for the future. You know, so it's all so important that we have a plan and we very strategically kind of something that Dave Ramsey says, name every dollar. You know, I love
Right.
that analogy that you put a identity to every dollar that you have, and if you have the stimulus and you have this $1,200 to $1,700 coming in, you know, try to plan and try to name those funds so that you'll know exactly where those dollars are going, and you account for it. You know, and it, like you said, you don't go out and eat 50 here, 100 there, and before you know it, it's all gone, and you can't track it in some sense. Um, Jonathan, on the real estate, which is part of a little bit of my passion as well, is could you tell our audience on the process of that and what is it and how do you, if you wanted to get into real estate or you wanted to get into rental properties, could you give us a quick few bullets on what to do and kind of the a few steps to get there, and how do you launch that off?
So the first thing is probably going, I would say, number one, think about your strategy. You know, there's multiple strategies. You can do the single family, which I'm just purchasing a single family detached home. You can look at the duplex. You can look at and the variations of the duplex, or you can look at multifamily, right? Multifamily normally requires a higher down payment because it's looked at as a commercial property. And then obviously you have more complexities because you now are managing multiple tenants at the same time versus having one house and you're collecting one payment. You may have a 6 unit that you got 6 tenants, which means you got 6 background checks. You've got 6 people that you're collecting for. You also have 6 people that are going to call you and say, my AC isn't working, this isn't working, that isn't working. So you have to just kind of be able to multiply out the potential exposure that you're going to have from a standpoint of your cash and your time. So for me, the way that I take the approach is first things I look at is my strategy as far as how much money do I have and what am I comfortable with risking? Because real estate, while it is a solid and safe, sound investment, there is still a risk involved. For anybody who doesn't believe that, ask some of the people who are managing these apartment complexes across America where tenants are like, I'm not paying. And oh, by the way, I know you can't kick me out right now. Now you might be able to kick me out after it's all over, but
Right.
for the time
Right.
being, I'm not paying, right? So there is still risk involved. So you need to understand kind of what your risk tolerance is, just like with any type of investment. The next point to that is the next part, and I would say is in my opinion, some people choose to manage their properties themselves. I do not consider myself a real estate expert. I have a good friend of mine who's been managing my property. I'll shout out Mr. Elijah Lewis, Infinity Realty Group. He's been managing my properties, you know, in Ocean Springs for the last 7 years. He handles it. He calls me and says, "Hey, what's going on?" So now I will tell you, I did manage it for a while, but it got to the point where it was a little bit too complex, and it was just a time suck on me. Every time something happened, if there was a gutter down or whatever, all of a sudden I'm sitting here trying to call around. So if you have that time, great, invest that time, save that money. But for me, it's money well spent in having somebody who is a professional and does that well. So once you have your capital, the next part is having, like I said, your real estate agent or your realtor that can help you secure property and assist you with the management of the property. And then the third part is really about finding good tenants, right?
Yeah.
And that's the process, right? That is it. And, you know, once you find the real estate and you decide you got the financing or you pay cash, it all kind of hinges on who that tenant that's going to be in your house.
Yeah.
Are they going to feel like it's theirs, or are they going to trash it and now you've got issues where you chase them down for the money? So being very diligent. Thankfully, there are so many platforms out there now where even if you decide to manage the property yourself, there are so many platforms out there now where you can do background checks, you can do automatic payments, ACH, you can do so many different options. So it's not like it was, you know, I feel like technology has made it a lot simpler to get into real estate, but it is still something that you can definitely look into. And the beauty of real estate is the vast majority of properties appreciate in value. And so then the goal is, you're talking about, you know, building legacy or you're talking about generations to come, being able to use that money to pay for education or just to have rentals. You know, a number of my clients who are, you know, in their mid to late 50 range and they're retired and they're comfortable, you start looking down the line. At some point, they either had real estate or they still do, and they have that
Yep.
passive income where now these houses are paid for, and they've got $2, $3, $4, $6,000 coming in a month in rental income, and that offsets whatever income they would not have from working a job. So it just gives you options.
Yeah, yeah, I love it. And some of our audience is speaking and asking questions and making comments, and like someone said, just hey, if you're gonna do it, start small. Go find that one single family home or a 2-bedroom apartment or whatever you think is small, but start small and build on it. And one of my dreams is to have about 28 doors. And when I finally want to retire, that I can give my kids, I can split all the rental properties up and give it to them so they can launch, and they'll have a launching pad. This passive income that's automatically coming in. So I definitely encourage our listeners to look into real estate as a small business. Well, speaking of small business, we have one of our audience wants to know. Let me scroll back real quick. I'm sorry. Some of the processes or your thoughts on starting a small business during this economic downfall.
I personally think this is a great time to consider starting a small business. Yes, it is risky, but if you find the right niche, this is going to be a perfect launching pad. I was telling a client yesterday, there are going to be so many things that are going to evolve, and I believe to a certain extent will never return.
Yeah.
The whole concept of, distance work, teleworking, telecommuting, being able to gather, even right now, Facebook Live. I mean, the mediums in which we're able to communicate with literally hundreds and possibly even thousands of people at a single moment is to me is phenomenal. And so depending on the interest, depending on the business venture, I think definitely have a conversation, put pen to paper, have a business plan. A business plan is not a pipe dream. It's, where you've done the research. It says, okay, this is how you actually monetize this business. This is how you're able to actually earn money from this. I tell people all the time, when I'm looking at business plans, I want to make sure that I can see a clear line and path to green. If it's a great hobby and it just makes you feel good, great. It might be a great hobby, but if it's not going to fund and fuel your life, it may not be a business. And so, but I think there are lots of ideas that are going to come out of this COVID-19 that people are going to be able to monetize and be able to grow and be a launching pad for a new venture. I think that anything comes with risk, but I'm sure there are people that started even during the Great Depression, 1920s into 1930s, and I'm sure their children and grandchildren are benefiting because somebody's willing to take that leap. So I don't think it's a bad idea necessarily to consider looking at launching businesses in this time.
Yeah. Wow. We have a bunch of questions coming in. So we're going to try to do a speed round of questions.
Okay.
And see if we can get a few of these in. This is an interesting question. Someone said, I heard some advice in the news this morning that is encouraging folks and even states to file bankruptcy. Is that smart to do?
I probably should say, as a banker and as somebody who makes an agreement to pay, to me, bankruptcy is kind of like a last ditch effort. To me, that's my personal opinion, because at some point you made an agreement to pay and now you're not able to. Now, do things change? Absolutely. And so I don't pass judgment if somebody had to file bankruptcy or choose to file bankruptcy. But what I will say is, if you make the decision to file bankruptcy, understand what comes along with that. What comes along with that is, now once you file bankruptcy, you're now gonna, when you may have a need for future money or for future, lending needs, that next lender, that first bat up, there's going to be that rebuilding phase. And they're going to say, well, you didn't pay somebody at some point. And then that just means it's higher risk. So now that first car you finance, or maybe even that first time you try to buy a home, there's going to be some more hurdles you may have to go through if you decide to file bankruptcy. Do I understand that there are probably going to be some people that are going to file bankruptcy in this situation, in this crisis? Yes, I do. I haven't seen the article about states, but you have to understand What it means for a state to file bankruptcy and what it means for an individual to file bankruptcy is kind of two different things.
Mhm.
States and publicly traded companies and even municipalities, they have ratings on their credit quality. So that would
Right.
just mean there's going to be a downgrade in
Go
their
down
credit.
to a C instead of an A.
But if you are a municipality, people are still going to do business with you once it's on the other side. If you're an
Yeah.
individual, they may not have to do business with you. So that's kind of what it comes down to. There are lots of large companies nationwide that pay their clients late, they pay their vendors late, they do all sorts of stuff because they can. Because the client would rather do business with them and have access to that check or that income coming even if it's 30, 60, or 90 days late than not at all. So what it means for an individual versus versus a business or municipality is very different.
Yeah, that's great information. Another question was, other than the real estate, is there any other passive income ideas that our listeners can think about and research?
So that's one of the things I was talking about earlier with some of the investments that I look for. I look for stocks that have some sort of dividend repayment, and that dividend payment is passive income in and of itself. You know, a lot of your tech stocks or utility stocks, utility companies, they pay dividends. And so what happens is you may own 100 shares of, I'm going to use Mississippi Power. I don't own Mississippi Power, so it's not an endorsement. I'm just going to use them as an example. So you may own 100 shares of Mississippi Power. If Mississippi Power is paying a dividend, you may get a quarterly check that you can either choose to reinvest that dividend into the stocks, and now you own more shares of Mississippi Power, or you now send me a check just for owning the shares. That to me is a really good way of looking at stocks that have dividends. You know, anything beyond that, typically any sort of what I would call passive income typically requires some measured amount of upfront capital, right?
Yeah.
That's called passive. That means
about how much upfront capital would you say?
I mean, it depends on what amount of passive income you want. I mean, if you buy, if you have $1,000 worth of a company stock and they're paying a dividend, you may get $10. But if you're like, hey, I want $1,000 a month in passive income, then you need to multiply that out based upon what the dividend is paying. Or same thing with the real estate. The passive income, to me, I consider real estate passive income once the property is paid off. But until it's paid off, it's not passive. You still have debt. You have
maintenance.
You have maintenance. You have all the things that are going to come along with that. So, I kind of think in my mind, the term passive income is a little bit of a misnomer because it's not quite accurate in the sense that there was still work put in and still capital along the way. Does that make sense?
Yeah, absolutely. Another one of our audience and the listeners say, hey, some advice here is to, really try to save. And it's one of Dave Ramsey's models as well. One of his steps is, hey, you got to save. Even in this economic time, if there's an opportunity for you to even snowball, if you get some deferments or forbearance or some type of relief on some payments, use that payment and snowball it onto something else that has a higher interest rate, that you can pay that thing off, earlier so that you can get out of debt, quicker, or not be, held hostages in the sense of being a debtor. So any other saving ideas or anything like that you would advise?
I think that's a great idea, Carlos. First and foremost, if you have the opportunity to kind of do a debt snowball, looking at restructure your debt, paying some things off, great to do. Secondly, is use this as a time to contact your bank, contact your creditors, ask, are there any interest rate concessions? Like, hey, look, I'm still going to make my monthly payment, but can you reduce my interest rate on my credit card? Because now that means if I'm still paying $100, more of my monthly payment is going towards a principal versus interest. And the other option to really kind of think about considering is now under the guise of teleworking, telecommuting, a lot of companies are hiring. You may be able to have a job sitting in your living room and making really good money. And you just, and all you do is say, hey, I'll agree to work. I'm now going to be, customer service. Well, if you're making $10, $12, $15 an hour, 3 hours a day, times 5 hours, 5 days a week, now that's 15 hours times that income. That's money you can put towards paying that off. I have a good friend of mine that he told me he's in a similar role to me. He's works for a bank, but he picked up a job as a delivery driver. He's paid off $20,000 in debt over the last year just from working 3 nights a week as a delivery driver. And so there are
Wow.
things that now you got to hustle. You're gonna have to grind it out, but it's about preparing yourself for the future. Carlos, one of the things that the Legacy Group, I see somebody, tell us a little about yourself too. So that way they know who I am. Tell us who you are.
Well, hey, guys, I appreciate the opportunity to be hosting this awesome topic about money matters. My name is Carlos Bell. I live right here in Gulfport, Mississippi, and Director of Public Engagement for the Port of Gulfport. And man, I'm just happy to help rip the roof off for somebody. It's all about trying to help as many people as their dream. Maybe one day someone can help me with mine, but I just love people, love to see how I can do what I can do to help. Right now, I'm working on a PhD in human capital development at University of Southern Mississippi. I have a master's in project management, and just trying to see how much we can do to help someone, be a servant, working on my servant leadership, just trying to be able to better serve people and help encourage people more. So that's a little bit about me. If you want to know more, you can chat more later on on our live stream here. But all these questions and all these things, I mean, I feel like we're at a time where we can really have an opportunity to redefine ourselves or to
Yes.
add more tools to our toolkit. We have all this time practicing social distancing and we're utilizing our internet even more now. It's so much that when these things when the restrictions are lifted and we get back to normal life, what are you going to bring? Are you going to bring anything different that you were before? Are you going to come back better? And so I think our Legacy Talk series is absolutely mission minded, mission driven on trying to help people put more tools in their tool bag and become more prepared for life down the road. And that's what I think some of our mission as Jonathan and myself and a few others are some of the original founders of this phenomenal business league, a legacy business league, and our fearless leader, Angie Juzang. We really appreciate the opportunity to talk about money matters and how do we plan for our future. I think we're about at 41 minutes. I think we're really close. I'm gonna look here and see, are there any other questions? So let's take this last one here. This is a good one here. It says, what's the most important message you can give young adults on how to financially plan in this climate? No jobs, little money. What can I do?
That actually is a kind of a great segue even to my final thought. One of the things that we sometimes do is we find ourselves in a place where we don't have access to quality information. So sometimes we start looking to other people. So first thing I would say is to that person who asked that question, what can young people do? Educate yourself. Make an informed decision. And when I say educate yourself, I'm not saying that you have to go to college. I'm saying educate yourself about what it is that you want to do and how you can get there. There is a resurgence and a need for trade workers where you can be making very good money, work where you can go work a 3, 6, or 9-month program where you get a certificate and you're coming out making really good money.
Yeah.
So I do not want to give the impression that the path to success is only paid by attending an IHL or an institution of higher learning or something like that. But what I'm saying is educate yourself with quality information. When I graduated high school back in the 90s, internet was a thing, but not really. So I had to spend time in the library trying to find out what the best paths were. And then the second thing is, don't be afraid to take risk. Don't be afraid to get out there, get out of your comfort zone and say, let me do something different.
Yeah.
My dad says it. I hear other people say it, but the definition of insanity is to do the same thing over and over again, expecting different results. If you're a young person and you want something different than where you are, you got to be willing to do something different.
Yeah.
You got to be willing to do something different. And that different may be a change in environment, maybe a change in circumstance, maybe a change in location, but you got to do something different. And last but certainly not least is surround yourself with positive people. Positive people who are doing the same things. One of the things I sometimes look at is I have people call me, all the time and tell me what so-and-so said. I'm like, well, what does so-and-so do for a living? I mean, like, you got to consider the source, consider your circle, and make sure that the people that you're surrounding yourself with, that you're getting advice from, that you're getting input from, that they are qualified and capable to provide that type of information.
Yeah.
That, man, the future is bright. I mean, you surround yourself with positive people, you're willing to make a change, and you're willing to put in the work to educate yourself to make an informed decision. I really believe you can achieve anything.
Yeah. I love it. One of my favorite books is written by Ken Coleman. Talks about the power of your proximity and building a legacy of building a legacy around good people that can help you get to where you want to be at in life. And I always talk about this passage in the Bible where Jesus is going into the Capernaum, and the 4 paralyzed men can't get through the front door. And because that paralyzed guy is surrounded by the right people, they end up ripping the roof off of him. And so it's so important that we surround ourselves with right people to help us get to where we want to go. And Jonathan August, you guys, phenomenal opportunity to sit here and talk to you and have a great discussion about, planning for our future and the money matters, and how do we rebound? How do we bounce back, after this pandemic outbreak and then the economic downfall? What do we do next? How do we continue to move forward and just really, really try to, hit a home run or hit a triple, hit a double, but you got to step up to the plate to take a swing at it. We can't just sit on the couch and just sit in the dugout. You got to get up in the swing, take a swing and see, hey, what can I do? And run. And have a good cheerleading session, have people there to support you, And so I see you as one of those people that are in my corner cheering me on. I'm in your corner cheering you on, and the Legacy Business Lead is in your corner to help cheer you on. We are so excited about this, and next week, you guys, we're going to be right back at it again. We would love for you guys to like it, love it, laugh. Click those buttons and the Legacy Business Lead and share it with your friends. We are building a nice repertoire of great conversations to help our community, help our leaders, help people go forward in life. And we thank you so much. Well, again, like, love, laugh, and share the Legacy Business Lead, and share it again. And we'll see you back next week. Thank you very much.
Thank you.